Are you running a business? Whether that's a private commercial business, an arts and social business, a charity, whatever type of business you're running, the one thing you cannot get away from, the one key thing that's really important to generate and make is this. Money, financial returns are an absolute necessity. It doesn't matter. Money is certainly not the only thing. It's not your only reason for pursuing your business, but it's got to be factored as one of your key objectives. If you don't aim to make money in your business, then you will not be able to deliver your why. You may even have to get back to having a proper job. You will not be able to sustain yourself, get those financial rewards that you deserve. You will not be able to build up a business that can have big impact, and lack of money is going to lead to your eventual death. That's all well and good. But in this video, I'm going to outline how do we make judgments, how do we know how we're doing in our business, how do we measure our success. Hi folks, welcome to another weekly video on I Hate Numbers. This is the channel that has got a mission to help increase your financial awareness, help you win more battles than you lose for what goes on between your ears, and help you and your business make more money, save time and tax. I said at the very beginning that making money, moolah, wonga, whatever you want to call it, has to be one of our key objectives. And by making money, we're talking about making profitability. Money just coming into the bank is not the only criteria, the only measure of success. And I'm going to outline to you some key numbers that you should be keeping an eye on and how we look at and read what those numbers should be. So as far as this is concerned, let's put this down for one moment. Two key numbers that you need to keep an eye on in your business. First of all, it's the level of profits that you're making from the activity that you're doing. So whether you're selling a service, selling a product, doing one-to-one, whatever it is you're doing outreach work, running educational courses, you've got to make sure that the value of what you're selling, the services you're providing, the activities that you undertake, the products that you're making, what you're charging your customer covers at least the cost of producing and providing those items. So if you were a retailer, the cost of buying in that stock, the cost of delivering that stock to the customer, and the cost of running your organisation ultimately has to be covered by the level of sales that you make. If you are a consulting business, a service-based business, the cost of running your office, the cost of your own time has to be covered by the value of the services you're providing to your own client. If you're an arts organisation, the cost of putting on performances, the cost of hiring the auditorium, the cost of paying your backroom staff have got to be covered by the ticket sales, the merchandising sales and the like. That surplus, that profitability is first of all your one key measure. And the two levels of profitability that you should be looking at is the profit that you're making, which is called gross, and that's not something awful, not something to put your fingers down your throat over, it's the profit that you make on that particular item. So if you are a restaurateur, if it's costing you £5 to make a meal, you should be selling that item for more than £5. If you sell that meal to a customer for 15 quid, that's a £10 gross margin. Now the idea is those levels of gross margins here all come together. And if you imagine your business with costs to cover, this could represent a tank of your support costs, your overheads, your rent, your rates, your salaries, and the money that comes into this tank has got to be covered first of all. Anything that washes over, anything that's left over will be what's classified as your operating profit, your operating surplus, your net profit. Take the term that resonates most strongly. Money in the bank to support these activities is fundamental. Cash not necessarily being the same as profit. So when we look at financial measures, the level of gross profit we make, the level of net profit we make are certainly two key measures. But how do we know if they're good enough? Well, this is, my friends, where the idea of what's called ratios coming in. Now, if I make a gross profit of £20,000, I might be quite pleased with it. However, that number in isolation means absolutely nothing at all. I've got to make sure that I can relate that figure to a reference. Typically, the level of turnover that I've generated. So if I've generated sales of £50,000 and I've generated a gross profit of 20,000, that's a 40% gross margin. Fantastic. Or is it? Is that good? Is that bad? I have no idea. So I need a reference. So do I measure that against what I did last year? Possibly. That's a good reference point. Should I measure it against my financial story, where I thought I would be in my business? That's certainly another good reference point. If one can see what other people are doing in your space, what levels they're generating, then that gives you a reference point and comparison. Comparisons are really, really important. Having something that's comparable, having something you're measuring against, gives us much more life to those numbers. Interpret those numbers though in context. So if you visualize that situation where a friend of yours invites you for a meal around their house, you go around their house and they serve you a meal after an hour of waiting. It's cold, the food is barely cooked, it's got interesting colours around the edges. What would your opinion be on that meal that your friend has cooked you? Now, you may not say that to their face, but you might be quite disappointed. You may think that's a very poor show. However, if I add to that, that's the first time your friend has cooked for you, the oven is broken, they've had a very stressful day at work, your interpretation, the food that's been cooked for you, may take on another dimension. It's the same with your financial performance. The numbers in themselves give you an indication, they tell you something, but you can look at the context in which you find yourself generating that level of profitability. Other ratios that you could look at, I'm just going to give you 2 or 3 in this short video. You could look at the operating margin, the net margin. So after you've supported and covered all your running costs, your salaries, your rent, your software costs, what's left over, and relate that as a percentage. Again, have a benchmark, have a reference point to measure them against. We can and we should measure different dimensions, different areas of our business activity. These 2 ratios are certainly 2 headline numbers here, but there are many other ratios that we can calculate. And in next week's video, I'm going to explore different ratios that we can do. What we need to take away from this video now is that to make judgments, financial results are not the only thing in town, but they're certainly an important measure. We should blend it with other measures of success and give ourselves a more cohesive evaluation of how our business. Ignore your numbers at your peril, ignore your results at your peril, and you're going to be headed to the rocks of disaster. Folks, I hope you got some value from this video, and please, I'd love it if you could share this video if you feel others could benefit. Hit that subscribe button. Tell me, do you agree? Do you disagree? Failing that, folks, have a brilliant week, and I'll see you guys on the other side.